Hello guys, welcome to my channel. I will explain in this video the process of recording business transactions and particularly the first step of the process, source documents. So let's get started. To start with, having business records up to date and accurate is vital for every company, regardless of its size or its business sector. That's why one of the key duties of accountants is to keep track of all business transactions by recording them into the company's accounting system. Based on all these recording transactions, management prepares periodic financial and management reports to different stakeholders, from owners, bankers, to government entities like tax authority. Recording business transactions is the process of entering business events into the organization's accounting system. By recording transactions, we translate business transactions into accounting records. Accountants follow a 3-step methodology in recording transactions. So first step is to understand the business transaction, the second one is to identify the affected accounts, and the third one is to meet the conditions of the double entry accounting concept. Let's have a look at the first step, understanding the business transaction. As a student, you would understand the transaction by reading carefully the question and collecting the required information from the question, like the monetary value of the business transaction, the nature of the transaction, whether it is a purchase, a sale, a payment of salaries, and so on. However, as an accountant or a bookkeeper, understanding a business transaction is achieved by examining source documents. For example, an accountant would know that the organization has made a purchase transaction from examining the invoice received from the supplier, or there is an increase in inventory account by examining the goods received note. The second step is to identify the affected accounts and how will they be affected, whether by a debit or credit, depending whether it is an asset, a liability, or an equity account. For example, in a purchase transaction, at least one asset account will be affected, whether we have a debit inventory or debit fixed assets, and credit cash if it is a cash transaction. And always keep in mind that we follow double entry accounting concept in recording any transaction, where minimum 2 accounts will be affected. The third step is to check whether the debits and the credits of the transaction meet the conditions of the double entry accounting. So we need to make sure that the total debits and the total credits of the accounting entry must be equal, and the accounting equation is still in balance. So the variation in total assets must equal the variation in total liability plus equity. If you want to have more understanding about double entry accounting, please watch the previous video. Now we'll have a detailed explanation about understanding the business transactions through source documents. We have to understand that every business transaction is evidenced by a document. Accountants can't make an accounting entry without having supporting documents. Therefore, the duty of the accountant is to record the information contained in the documents generated as a result of the business transaction. Let's have a look at the information contained in a source document. We usually expect to find the following information in a source document to record the business transaction into the accounting system. The first piece of information that we would look for in a source document is the description of the business transaction. What was the nature of the business transaction? Was it, for example, a purchase for cash, or payment of wages, or offering a discount, or just payment for speeding tickets? The second piece of information that is very important is when has the business transaction occurred? And of course, the third information is the monetary value of the transaction and its currency. The fourth information are the terms or conditions of the transaction, which basically were agreed upon by the business parties. For example, delivery terms or payment terms. The fifth information is the signature of the approving party. This serves as an evidence that the transaction was authorized and the document is authentic. Let's have a look at the most common source documents that we can find in any business. The most common source document is an invoice. Every business receives and generates invoices. A company receives an invoice from a supplier or a service provider when buying a product or a service. We can define an invoice as an official demand for a payment from the supplier to the customer. Let's have a look at the information that we can find in an invoice. We should find information about the name and address of the supplier and the customer. So for example, in this invoice, we can see that the supplier who sent this invoice is Smart Computers Limited, and the supplier's address is Glasgow, UK, and the customer is Viking Delivery Limited, and its address is Dublin, Ireland. Every invoice should have a date and a serial number. Like for example, in our invoice here, the serial number of the invoice is 025, and the invoice date is 26th of April 2020. Another key information that we should find in an invoice is a description of goods and services sold. Like in our example, Viking purchased 10 Dell laptops from Smart Computers. An invoice should clearly define the price and the terms of payments. Like in our example, the price for the 10 laptops is 5,000 euros and the due date is 26th of May 2020. In most invoices, we can find a reference to the purchase order, which is actually a good control to make sure that the company is charged what it has actually ordered. And in our example, the PO number or the purchase order number was referenced 04-2020. The second example of source document is the credit note. Credit notes are usually raised in some cases where the supplier charges the customer a higher price by mistake, or delivers a product of a lower quality than it was expected by the customer. So to solve this kind of disputes, the supplier sends the customer a credit note to reduce the amount charged. So when the accountant prepares the check to pay the supplier, the check amount should be the invoice amount less the credit note amount. Let's see what kind of information we find in a credit note. Apart from the common information that we can find in any other source document, the most important information that we should find in a credit note is the description of the product for which the payable amount was reduced and the deductible amount. Let's say that Viking Delivery Limited has actually ordered only 9 laptops, but it was charged for 10 laptops. In this case, the supplier would raise a credit note that describes the extra product charged and the deductible price, which is 500 euros. Another important source document is a purchase order. A purchase order is a documented request to a supplier for specified goods at an agreed price and delivery terms. Every purchase a company makes should be supported by a purchase order. Let's have a look at the key information that are commonly included in a purchase order. A clear description of the ordered goods in terms of quantity, unit price, and total price. The purchase order also stipulates the delivery and payment terms, such as the delivery address and the payment period after the invoice date. And of course, at the bottom of the document, the signature of the authorized person, usually the procurement department of the customer. And finally, the goods received note. When the goods are received, a GRN is raised by the company to notify the concerned department, like the accounts department, that the goods have been received. And the accountant checks the goods received note before preparing the payment against the invoice. And any items that are found in the invoice are not found in the goods received note, the item's value will be deducted from the invoice amount and only the balance will be paid. The goods received note is the evidence that goods charged in the invoice are actually received. Aside from the basic information found in any other source document, like the supplier's name and address, the customer's name and address, the document number. The following information are key elements which are commonly found in a GRN. The first information is the description and quantity of the received goods. The second information is the date and time of the delivery. The third information is the name and signature of the receiving party, usually the store representative. The last information is the name and signature of the supplier representative.